Alright, welcome back. Uh, as you can see, there has been a downgrade in video quality overall, and yeah, because I'm using my laptop, so no complaints and all. But it's still gonna be the same thing. I'm gonna be going through some accounting questions. I'm gonna try to figure out like the answer to it. As for today, I'm gonna be discussing three questions, so it's actually these are actually exercises that should be done in 2 weeks, within 2 weeks. So it's like a 2 weeks worth of assignment, of weekly assignment. But then I I have to do it like all together for chapter 9 because it's in the same chapter. So let's just begin. First question, it's about income allocation schedule. There's not much to say here, but this is my final calculation, so it's all in here. What happened here is that uh, an interesting thing that we can see here is that there's like an interconnection, like I don't know how to say it. Like basically, it all relates together. Let me show you what I mean. So Magadha, which is the parent, yes, it's the parent, owns Shifa and Bima, but then Bima also owns Shifa. So there's like a connection there. You have a parent that owns two companies, but then these two companies, one of them owns the other one as well. So there's like a kind of like a relation between them, and that needs to be taken into account in calculating the income allocation. So, for example, to calculate the Shiva's share for Magadha, I calculated the Shiva share, so multiplying by 0.9, but then I also adjusted with the proportion uh, is that is affected by the Bima's ownership. So I put the whole like formula so that you can see which one of the numbers that I use to calculate. But essentially, I calculate the Shiva's ownership, so 0.75 with the indirect Shiva ownership that I get from owning Bima, which is this 0.9 times 0.25, and I'll get that result. And the same thing applies to Bima. I guess in this case, since I only own Bima and Shiva doesn't really own Bima in this case, so I can just put the 0.9 in, and I calculate the NCI. Basically, it's the rest of the amount. I use formulas here, but then it's all basically the same. So the residual value from like 500 to 487.5 here, that's like 12.5. Same goes for this, same goes for the total, and in total, you'd have this amount in Magadha's share. That's for E92. Yeah, it's pretty straightforward. For E98, we are told to calculate the income. Uh, yeah, so like the income, the NCI, and the controlling interest share. To begin, calculate the income, and to calculate the income is pretty straightforward. We have their initial income of 100,000, and we need to adjust them by the unrealized profit. It's mentioned in the question, but there's like an unrealized profit here, and so you need to adjust it. And you'll get that, and then you multiply by the ownership share. In this case, I multiply it by 0.8 since Parang owns 80% of Sancor. For number two, um, it's an income, like I just make like a similar table as the first question here, but it's like an allocation schedule thing. I have their separate income, and then the difference here is that there's like adjustments. Again, we make adjustments because there's like unrealized profit here for Chris. So I make that, and then we calculate the parents' share. As for number three, this is like the income allocation schedule. We have separate income, but then there's like adjustments, and we are told to calculate the controlling share, not the NCI share, but the controlling share. And so, yeah, I just um, what I did here is that parent is the parent, so it owns 100%. But for this one, I just multiply them by the each respective ownership percentage and all, and total them, and you will have this number. These are the things that I calculate. So that's for number E8, E98. Maybe I should adjust this to NCI. Hold on. Okay, that's better. For the last one is E93. So it looks very long, but then the question here asks us to calculate controlling share of income under the treasury and the conventional approach. The main difference is how you allocate those. So you know how in the beginning we talk about some company, there might be like interconnected ownership between companies, between parent and subsidiaries. Maybe the subsidiaries owns the other subsidiaries that belong to the same parent, and that creates different like accounting treatment. And so one of the example here is that in treasury stocks, you basically don't want to consider that as part of the share. Instead, that's like part of the treasury stocks. But then in conventional, you want to consider that as part of the share, and there needs to be more calculation. So to put that in practice, here in treasury stocks, I have the SIN income, and basically I multiplied their income by the ownership, and you'll get 20,000, and then you put the pen income, the whole pen income of 50,000, and you'll get 70,000 as the final CI income. This is different from the conventional approach, as in this approach I did the same thing for the SIN income, but then for the pen income, since SIN owns 10% of pen, there needs to be some adjustments. So I took 10% of it, I got 5,000. But then I took 80% of the 5,000, I got 4,000. The reason I took 80% here is that because SIN owns 10% of pen, but then pen owns 80% of SIN. So in this case, SIN owns 5%, but then from the 5%, 80% of them is owned by the pen. Because pen is the parent and they own 80%. I hope that makes sense. And so the CI portion here is 4,000, and you want to adjust it then. You have the initial SIN portion and you have the CI portion, and you would get like an what I just called like the NCI portion. And basically, since this is not part of the parent share, you should exclude that from the pen income. So the initial pen income is 50,000, and I adjust using the NCI, reduce it by 1,000, and I get 49,000. And then I add 49,000 with the 20, I get 69,000. And so what I want to tell you again is that I didn't really use the information on the purchase because I don't think it affects the calculation. I think the purchase here does affect the journal entry if you were to make one, so like the ending balance, because it has different retained earnings and such. But then I don't think it affects any of the calculation because it really all depends on their net income. So that's what I think, because the question also asks about the controlling share of net income. So our focus is on the net income. Yeah, and that marks the end of the video. I think this one is like a little bit short. Let me know if I said anything wrong, make mistakes and all. Let me know in the comments, and maybe I'll see you in another video. Maybe next week. Maybe next 3 days next week. I don't know. But yeah, I'll see you in the next video. Bye bye.